Hey everybody, how you doing? It's Uncle Bruce here from Stock Markets with Bruce. Thanks for joining me on this video. Today's date is Friday, May the 17th, 2024, and we've just had one hell of a week. We've just had one heck of a 2-week period here for GameStop shares. I wanted to bring you my perspective on what's going on. People ask me all the time. I'm live every day, 8:30 in the morning when markets are open until 10:30, giving you my opinion on what I think is happening in plain English in the markets. And people have been asking me like crazy, what is the deal with GameStop? Is it all over? Is this stock going to do more? What's happening? So let me kind of give you a little info. And also, I want to fill you in on what Wall Street might not be telling you. You all know what Wall Street is telling you. It's kind of like dumb money all over again. The 2021 episode where GameStop went from June 2020, $4.80 when I did a video on this company with the huge short position, all the way up to 400 something a share in January, February of 2021, and then back down and up and down and up. The boys on Wall Street, the girls on Wall Street, they're just repeating the same old mantra to all of you out there because they're lazy. They're not getting into the details. They don't want to get into the minutia. They can't go to analysts to ask what's going on with GameStop. Why? There are only two analysts that follow the stock. I mean, there's no analyst to go to. Partially the company's fault because GameStop is very secretive. In any event, what Wall Street is saying to the world, if you care to listen to these guys, and many media outlets quote these people, they don't do any of their own research. You probably know that. They're saying it's dumb money part two. All it is Roaring Kitty making some kind of a tweet somewhere of a guy leaning forward and studying something, and there's your sign that something big is going on. Very lazy and ignorant kind of a recap. Now, today was a major day in the history of the company, and perhaps going forward, this could be one of the most important days we have seen in GameStop's history from here forward. This could be something really interesting. What the company did before the market opened during the pre-market trading session, the company came out with a couple of filings with the SEC. And over at Grapevine, Texas, they're sitting there going, wow, our share sure took a shot this week. They were $10 a share 3 weeks ago. Then they got up to that 15, 16 level, which is, kind of nice to see the stock back to that level. That reminds us of the old days. If you multiply these prices times 4 before the split, $15 a share is 60 bucks. $20 a share is $80. It's kind of nice to see the stock a little higher. And then the shares, of course, ran up to the 20 range, the 25 range, the 40 range. And this week, in one of the pre-markets, I think we even touched $80 a share for like that long. That's $320 going back. Just to remind yourself, that's what GameStop did this week. But during market hours, from in the morning at 9:30 in the morning Eastern until the close around 4 o'clock on the New York Stock Exchange, since May the 2nd, which is now 12 trading days, the stock has traded 900 million shares, and the stock has gone from this $10 level all the way up to the 40, 50 range, 60 range for a while, and then come back now to 22.21 at the bell tonight. And the company this morning came out with a couple of SEC filings. And they, first of all, came out to say that they have decided to release a preliminary estimate of their first quarter financials. And then they announced that they had hired and engaged the services of Jefferies and Company, same brokerage firm that they engaged their services a couple of years ago when they raised $2 billion at $154 a share back in 2021-22. They've engaged them this time to issue about 45 million shares from the treasury of the company. And if you divide that by 4, it equals 11.25 million shares from what we used to be dealing with way back when. 45 million shares today at whatever the market will give the company. And last night we were sitting around $27 a share range. And then this announcement came out. The stock was trading at 24.25. And then as soon as that hit, um, the stock went down and people thought, oh, it's all over. This is the end of the game. This is SoFi throwing in the towel. This can't be good. Now, these financials I told you about, this preliminary first quarter financial report, all right? Couple of highlights for you, all right? Wall Street was all over this. They were happy to tell you and pass on to you the fact that they are going to lose, they think, in the first quarter between 27 and $37 million. They couldn't wait to tell you that. What they didn't want to tell you, but they had to, was that last year in the first quarter, the company lost $50.5 million. So the company is estimating a loss of 40% less, at least, versus last year. I'm kind of guessing more in the 27 million will be the loss number. Remember, this first quarter is the worst quarter of the year for all retailers, especially someone like GameStop that is drowning in customers at Christmas time. And in the first 3 months of the year, January, February, March, it's kind of quiet in the gaming area. Anyway, net loss will be 27 million versus 50 last year. Gross revenue, Wall Street couldn't wait to tell you this. They let you know that their gross sales are estimated to be between 872 million for the quarter to 892 million, somewhere in that 20 million neighborhood, versus last year 1.2 billion in sales. And they're saying, see, the company's sales are plummeting. They're in big trouble. What they didn't mention, and the company, to be fair, didn't say it either, but I'll tell you, if you've been watching me for a while, you know that the company has been closing underperforming stores. When do you close stores when you're a retailer? You don't close them in December, not during Christmas. You don't close them in November. You close them in late January, February, and March, the first quarter. That's when you shut down underperforming stores. Leases are designed through shopping malls and strip malls and any other landlord to expire in the new year, giving the landlord time to renovate the space once the old tenant leaves, get it all prettied up for summertime, and then rent it out in the summer and the fall for the next Christmas season and years beyond. So SoFi has been shutting down now for 3 years since Ryan Cohen took over the company, all kinds of underperforming stores. And in certain cities, GameStop would have had at one time 10, 11, 12 different stores all over large metropolitan cities. Now they're at 5, 6, 7 stores. And the underperforming stores are gone. The performing stores are now catching all the business from the old stores. The customers are still clients. A GameStop customer living in Houston or Dallas or Cincinnati or Pittsburgh or Chicago is still a GameStop customer. And they just go to the other stores. And so each of the stores surviving, their sales are actually higher and the margins are higher per store. None of that is being mentioned today. All right, so think about this. The company is only going to do 872 to 892 million in sales in the quarter versus 1.2 billion, and yet they're not going to lose as much money. What? How, that makes no sense. How can you have 300 million less in sales and lose less money? Well, let's move on. I'll explain that in a minute. Their expenses. Here's the number. Their expenses are estimated to be 290 to 300 million from the total operation of the corporation. That is, compared to last year, 345 million. In effect, because they've shut down a high number of underperformers, they're just shutting these down, their costs of being in business is 50 million less this quarter. Now, last year they had cut expenses versus the year before that. They're still cutting costs going forward here, which means, again, the margins are rising. On every dollar they sell, they keep more of the dollar, and they are cutting expenses like crazy. And this explains why is the company going to lose 27 million versus 50 million when the sales are down $300 million. Wall Street won't tell you that. They won't get into that. They are ignoring that part. All they're talking about is the brick and mortar aspect of the company, and they're comparing it to Blockbuster Video without analyzing why the business is still running and will continue to run for years and years and years. Cash on hand, they say that they have about $1,007,000,000 to $1,009,000,000 compared to last year's 1.3 billion, and they're going to raise at this point with 45 million shares. My guess, they're going to raise over 900 million additional cash. The company is going to have about $2 billion in cash on hand starting Monday, Tuesday morning. That's how much they're going to have. And at 5% interest, you folks yourselves can go to your local bank right now. You can get a 5% GIC, a guaranteed investment certificate. These guys can get 5% interest on their money through their brokerage connections. Oh, you darn right they can, if not more. They're going to start hauling in $2 million a week in interest on this $2 billion. 5% is $100 million a year. They're going to make $2 million a week in interest now. So every quarter, there are 13 weeks every quarter, through 13 times 4 is 52 weeks a year. These guys are going to generate $104 million in interest, and this $2 million a week or $26 million a quarter is now going to be added on to their projected forward earnings. Okay. That no one talked about that. Oh God, no. Wall Street doesn't want to go there because that's good news. There will be 350 million shares outstanding when this deal is done. 2 billion of that of the company's wealth is cash. If you take the 2 billion and divide it into the 350 million shares that will be out there, each share has cash on hand 571. So the company in cash is worth 571, earning 5% on the money. All right. If GameStop turns a profit this year, and I expect they will, with 100 million in cash coming in now yearly, depending on how long they can hang on to the 2 billion, and I'm sure they will make anywhere from 100 million to 400 million in profit, depending on sales, store closures, margins, you name it. And I did some simple math. I just did basics. If they make 100 million profit, it works out to 571 a share value at a 20 PE multiple. That's what this comes out to. If their profit is $200 million, their stock price should be worth around $11.42. They make $300 million, it should be $17 a share. And if they clear $400 million a year, $22 a share. Now, the first $100 million is coming in from the money. The company last year had a profit for the year of $17 million because they made profit in the fourth quarter of last year where these cost cuts really took off. And they came out with a net profit of $63 million in the final quarter last year. They lost $3 million in the third quarter. They lost $2 million in the second quarter last year, and they lost $50 million last year in the first quarter. I've told you that. This year they're going to lose $27 million in the first quarter, and we're not accounting for any interest income other and above what they're making already on that billion they got lying around. In the second quarter, if they don't do any better than last year, and I think they will because their expenses are going to be way lower this second quarter than last year's second quarter. Instead of a $2.8 million loss, I can see these guys pulling an easy $23 million profit out of the second quarter, a $23 million profit in the third quarter, and this year's fourth quarter could be $89 million. Now, just those numbers alone will tell us that we're generating a company, it's generating 110 plus million in net profit. Cost cuts, I think, are going to continue to come through, and it'll add 20 million a quarter to the second, third, and fourth quarter. And I'm going to guess that translates into 43 million profit in the second quarter, 43 in the third, and 109 million in the fourth. And you add those numbers and take away the 27 million loss that we're expecting now, leaves you with $167 million profit for this year, 2024. 167. So between 100 and 200 million dollars in profits, my calculation tells me the stock is worth between 571 and 1142. That's the ballpark. And I think there's more in store than that. This is just my gut feel, but I think we're on our way higher. In other words, the stock was $10 a share 3 weeks ago because people were convinced it's all over. Every article was negative. The company's going out of business. They're not going to make it. They're a brick and mortar company, blah, blah, blah. And I'm thinking they're going to come out and show the street that, well, actually, based on our economic performance were really worth more like 10, $11 as it is. And that's at a 20-time PE multiple. Now, what do they do with the $2 billion? What are they going to do with this money? They're not going to just collect 5% interest on it. I've given you all my projections if they don't do anything with the money. They just collect interest on it at 5%. They could well get into another business. They could well buy up another company. They could buy something else to add to their business, which adds to their cash flow and earnings. And I'll keep you posted when I know more. Wall Street won't tell you a damn thing. They're not even going to take a guess at it. By the way, there was an upgrade today. The stock was upgraded today by Wedbush. Wedbush analyst raised the target price from $5.60 to $7 based on raising $900 million new cash. The analyst came right out and said, well, yeah, if you raise $900 million more money and they're going to be sitting on about $2 billion in cash and they have no debt, these guys are much stronger economically than they were 3 weeks ago. This is a boost higher, which could justify the stock hanging around the $20, $22 neighborhood. The last thing I'll mention to you could be the most juicy thing, and these videos always have the most important info at the end. Who has been buying up the stock from the 10 to the 12 to the 18 to the 20 level to the 30, 40, 60 and beyond in the last 2 weeks, and why? I have been speculating that if an investment group out there wants to get rid of the current management and take over the board of directors of GameStop and run the company themselves with $1 billion cash in the bank, which I've been talking about, one way to do it is just to buy up a bunch of stock on the open market, nice and cheap, pick up all these votes and vote out the directors and vote out Ryan Cohen and replace your own people in there. You could do that. How many shares have these folks picked up? 900 million have traded on the open market. There are 65 million short positions out there. 65 million of shares are shorted officially in the last 2 weeks now, with 900 million traded. Have there been 30 million more shares shorted into this company at $20 and $30 and $40 a share? Is that possible? It is possible. Could there now be 100 million short? The 45 million they're issuing today won't get rid of the short sellers. There's not enough stock for all of them to get out. So it won't go back to 10. What if the company in the next 2 weeks announces that we've raised 900 million, and then they come up with another announcement, like a capped call financing transaction, similar to what Uber did, similar to what other companies like SoFi have done. What if they come up with one of these that starts in the $20 range and tops out at 45, and they raise $2.5 billion more cash on that kind of a deal? Now they've got $4.5 billion to really go after somebody. This company's makeup could be completely different by the end of this year. We may have GameStop, the retail business, over here, and then GameStop, an investment portfolio, over here. And that will create all kinds of buzz in the marketplace. We could have a takeover of management. We could have an out-and-out takeover of the company. Now, the company is a juicier takeover with $2 billion cash in the bank and a performing brick-and-mortar division. On the other hand, the new owners might come in and say, we're going to sell off the GameStop retail division. We're just going to get rid of it. And we're going to take $1 billion or $2 billion for that and sell it to a private entity. And we've got a company with $2 billion cash, another $2 billion cash, and now we're going to raise another $2 billion cash. We have a $6 billion financing company, investment trust, some kind of monster, creating a quick monster investment outfit. I don't know. There's so many possibilities. Wall Street is so fixated on Blockbuster. They can't get it out of their heads. Every radio station you listen to, any television interview, you hear people talk about Blockbuster and GameStop like they're the same company. People cannot get away from the 90s and the 2000s. It's 2024 and things have changed. Anyway, GameStop is going to be cash rich. Monday morning, very cash rich. And there could be more coming, including a warrants offering. If we get one of those, we've really got something going on. A warrants offering is where every shareholder gets a warrant as a gift from the company, which is kind of like a call option to buy stock in the company for a set period of time. And the warrants will trade on the open market as a separate security. Shareholders can just sell them off and take the money, or they can exercise them and buy more stock from the treasury. If they do a warrant offering, which I would love to see, I would just love to see a warrant offering come out on GameStop, there would be a minimum of 65 million shorted instantly. There will be a short position of 65 million warrants, because if you're short the stock, you owe the warrant. You have to have the warrant. All of a sudden, 350 million shares, 350 million warrants with 65 million shorted will be the starting point of this thing. That could create a short squeeze unseen ever before. But that's another video for another day. Thank you for joining me. Make sure to join me every Monday to Friday at 8:30 in the morning for Uncle Bruce Live. If you're a Gold Bagel member of this channel, you're one of these guys, you can join me at 8 o'clock to 8:30 every day, just for Gold Bagel members. Pre-alert show with trading tips. We talk about how to write stock options to help you quit your day job a lot sooner than you ever thought possible. You're thinking of retiring younger? Instead of going till 65, you want to retire at age 40, age 38, 44, 50? Maybe writing options is the way to go. Check out my website, stockmarketswithbruce.ca. You'll learn all on how to write stock options there. Thank you all for joining me today. Have yourselves a wonderful weekend. We'll see you here Monday, bright and early. We'll get this party started. I don't think we're done on GameStop. We closed at 22.21 today. I think we're going higher. I really think we're going higher. Stay tuned. Thanks, everybody. Bye for now.